Okay, everyone, welcome to the February 2021 episode of the Greenleaf Financial Fitness Series. Today we're going to talk about the stock market and the economy, so thanks for joining us. We always like to give a quick introduction to the people who make these things happen behind the scenes. A lot of you probably already know Jamie Greenleaf. Jamie is a partner and advisor with Cafaro Greenleaf. Here with me, Jim Hiles. Jim is the managing partner of First Capital Advisors, also the founder of GoPlan 101. And I am Jim Dee. I'm your trustee financial advisor. So first we wanted to just talk about a little bit about the GoPlan 101 resources, and what's new this year is we're offering our webinar participants a free 30-day access. So that's our financial wellness resource, and it's chock full of tools and content. So when you get a chance, check that out if you're so inclined. So we thought, what is the stock market and why do we hear it? We're obviously, since COVID has struck, we've heard a lot of talk and chatter about the stock market and the economy. They've been in the news for the last 12 months. We thought we would take some time here to talk about how they're the same, how they're related, and also how they're different. So what do we mean when we talk about the stock market? Basically, right out of Investopedia, the stock market is a consensus view about the future of publicly traded companies. And generally, stocks trade on expectations of future earnings of companies that are on the stock exchange. That's it. So some of the main groups or indexes that you see in the news all the time are the Dow Jones Industrial Average, or the Dow, the S&P 500, or the NASDAQ. Those are the big ones that we see often. And stock market information is in the news all the time. People, stock index prices that we just looked at, the Dow, the S&P, the NASDAQ, are often really the most visible source of financial or economic information that people encounter. But it's often confused as a gauge of the economy. And that's why we thought it would be a good idea to do this. Media and politicians often point to a rising stock market or a good stock market as evidence of a strong economy. And we asked the question, well, is it? And we thought we'd take a look. So obviously, that begs the question, what is the economy? So again, right out of Investopedia, the economy is basically defined as the wealth and resources of a country or a region, especially in terms of the production and consumption of goods and services. So one way to understand economic activity has been through real gross domestic product, GDP. I'm sure you hear that in the news a lot. So that's a monetary measure of the market value of goods and services that are being produced. The indexes, the stock indexes that we talked about, are leading indicators of economic growth based on future profits that are expected from companies. That is what we talked about. So GDP uses past data and projections on economic data and activity as well. So that's a mouthful. Jim Hiles, glad you could make it.
Thank you, Professor Dee, for doing this class today. Economics 101 is great, particularly after lunch. So, first of all, hello, everybody, and Happy New Year if you haven't already said that. And, what's going on out here is really the question we're getting from people. Is the news about, is it good news about the economy? Is it bad news? Are we doing well? Are we not doing well? And is the stock market doing well? Or is it doing well? We don't even know anymore. All we hear is all-time records, all-time records, all-time records. Well, that happens every time you have an all-time record, and that happens when the market goes up. So we think it's really more of a tale of two economies. And it depends where you look in the economy, which you may get to a different solution as to whether or not the economy is doing well or doing poorly. And you have to kind of look at kind of what's going on and caused this whole thing, and that's COVID-19. This is the chart, essentially, is looking at the tested versus daily reported, deaths really for the last, can't believe it's been a year, but it has. The good news in this, I think what people are saying is that the second wave or third wave has peaked, and we're hoping it stays that way as more people get vaccinated, as we do a better job at social distancing and taking care of ourselves in terms of what's going on. We're hoping to see this decline in COVID, which has created the problem in terms of even asking the question, how well are we doing? Well, if you look at the GDP, you can see that this chart is showing in quarter one and in quarter two, which is really when COVID hit, was in quarter two of 2020. I mean, we were upside down. We had a negative growth in our country of almost 30%. 30% negative growth. That means we shut down. Things stopped. And as a result, we had a significant and one of the quickest, if not the quickest, recession in history. Now, if you look at quarter 3, 4, 1, 2 of 2021, we're all back to the positive. And we think this is what's going on in the economy right now. People are looking at the GDP in quarter 2 thinking how bad it was. But I think we need now to look at the GDP going forward and look how good it's going to be.
Tell us about the service sector.
Well, here's the problem. There are different parts in the economy which just got hammered and did not come back as fast as other parts of the economy. And think of it in your own world. We use Zoom all the time now. We did not use Zoom before 18 months ago. And the reason for that is because we didn't have the COVID need to use it as much. And as a result, the part of the economy that relates to doing business that way has actually fared pretty well. I mean, those companies have done well. People have been employed. We've been able to do our jobs. However, there are certain segments of the marketplace, i.e. the service business, the service sector. Think about it. Restaurants, hotels, travel, entertainment, all those places have been pretty much shut down. And they are lagging other parts in the economy. And that's what we're seeing. Depending on where you look, you can find bad news. You'll find it in the service sector in particular. But you'll find there's some pretty good news in other sectors in the economy, particularly in things like manufacturing.
Right.
It really is COVID dependent.
Right. So I like this slide because it shows how COVID has accelerated changes that were kind of already happening in the market. And it also shows how it affected spending habits. People are still spending money, but just on very different things. You know, the stay-at-home things, right? They call it the stay-at-home economy. So also it took e-commerce. This second graph here is kind of fascinating to me. It took e-commerce 10 years to grow from 6% of the economy to 16%, and then only 10 weeks to jump from 16% to 26%. That's an amazing acceleration, to say the least, right?
It is, and I think what that's also saying, and this chart, if you stop it for a second, says the same thing. Technology has, and the use of technology has changed the way we do business in a significant way. But that trend has been in force for the last 10 years.
Right.
And what you'll see here, if you look at the biggest names 15 years ago on the index, General Electric, ExxonMobil, Microsoft, Citi, BP, Procter & Gamble, Johnson & Johnson, those are the biggest companies out there. Look at the indices today: Apple, Microsoft, Amazon, Facebook, Alibaba, and Google twice with Alphabet. So you've got technology is really leading the way. And you could probably ask yourself the question, if you look at your business, is it a tech business? It may be. In other words, there's so much technology in everything that we do. Everything is dependent upon technology. It makes perfect sense that this would be the case. But COVID has definitely had an impact in terms of how we're using technology in a very positive sense. And when you look at it from corporate profits, this is the S&P, this is the index. So they're just looking at 500 companies across the index. So how do you make sense of the stock market? Is it too high in price? Well, the only way you know how the stock market is what it's worth is by looking at how much money it's going to produce the investors by being a shareholder. That's called corporate profits. They call it earnings per share. In other words, if corporations are expecting to make money, earnings per share, profits, then there's a high likelihood that the value of that price will continue to rise. As you can see by this chart, those blue lines over there are projections into 2021 as to what the S&P group is looking at in terms of increased profits for this year, meaning that there is still upside to the stock market in terms of pricing based on the profits they're producing.
Right. We talked about this. I mean, the stock market is what's considered to be a leading indicator, and if it's already high and expectations of earnings are even higher than where they are today, that's a pretty good sign, right? Tell us about fiscal stimulus.
Yeah, I think you have to look at other things going on, and there is a lot going on. We're only going to cover 20 minutes here, so it's going to be tough. But what helps the economy? Well, we had to do fiscal stimulus. We had to put the government printed money to put it in the economy to support the economy. It was like we had a horrific event that took place, and in this event called COVID, we had to do things which were unprecedented by printing money, getting the economy, keeping the economy moving in the places that made sense to do that. That was called stimulus, fiscal stimulus. They're going to continue to do that going forward into 2021. But if you start thinking about this, we've already spent $5 trillion. $5 trillion.
Nice.
We're going to spend potentially another trillion or two more. That's all good for things like stocks, generally things like real estate values. If you try to buy a home or sell your home recently, you'll probably have gotten a boost if you live in the suburbs.
We've seen that for sure. But people leaving the cities, for one.
That's right. But there's also created a kind of an acceleration of movement to different types of real estate. And we think that with stimulus, it's also going to increase asset prices. Now, that's called inflation, by the way.
More money chasing the same number of assets.
More money going out there chasing the assets, but you got inflation. When you start printing money, you're going to see price increases. Inflation's not here yet, but it will be. If we get $15 an hour in terms of minimum wage, that's just another indication of inflation is coming. So we need to be aware of that. Prices will go up because of inflation. Initially, we think that's positive. Tax proposals. So the good news and bad news, we changed administration for whatever it's worth. We're having to deal with new situations. And they're good things that we think the administration may bring. And then there may be some challenges. Let's talk about the good things just quickly. If they spend that money, that's going to be money coming into the economy. It may be coming into places that we really need it, like infrastructure. We can do a lot in this country to upgrade our equipment, if you will, across the globe when it comes to not just roads. We're talking about technology again. We're talking about 5G phones and increased internet capability and things like that. Smartphones, smart buildings, smart cars have a lot to do with moving the country forward. If you don't have the infrastructure, you can't go very far without it. On the other hand, you have taxes. Taxes are a takeaway. Obviously, when you take money out of the system to pay for things, that takes money out of the profits of companies and out of pockets of individuals. That's not necessarily looked to be a good thing. However, we lived these taxes before. These tax rates that we're looking at here are not going to set the economy back into a major recession. It will be a little bit of a headwind that we're going to have to work ourselves through, but it's not going to sink the ship. So the next thing we want to talk about is the global business cycle. Okay, so let's take a step back here. Economics 101, business cycles exist. They exist in three, it looks like a wave. It looks like a wave at the beach here almost. Three major growth periods and then a recession. So think of it this way. There's an early part of the cycle, a mid part of the cycle, a late part of the cycle, and a recession. And it pretty much has gone that way forever. And what this is basically saying that different things happen. You can begin to read here. If you look at early phases, activity rebounds, GDP, here we go. Income, inflation starts to grow. Credit starts to go. Profits start to grow. Policy is stimulus. Geez, that's the word stimulus, isn't it? So you could probably make the argument now that we are in an early phase recovery in the business cycle. And when you look at the little dots down there, you can actually see that there are different places around the world, different economies have been plotted here. China is actually further ahead in the recovery. We're next with Europe, UK, Canada, and Australia, and then you see the rest following. Matter of fact, Japan and South Korea seem to be coming out the last over there.
Right.
So this is all good news in terms of where we are from an economic standpoint. So if you think or hear that the economy is not doing well, there are definitely parts in the economy which aren't doing well. However, from an overall standpoint, we look globally, actually we are coming out of early phase recovery in the business cycle.
Right. You'd almost look at it as the shutdown was a manufactured recession, right? So it kind of it didn't just speed up. The normal recession doesn't happen so quickly.
Yeah,
we saw a very fast recession, and now we're starting to see the recovery. So we spent a lot of time talking about the U.S. stock market for most of this point, but if we look at the international stock market, we should mention that obviously COVID's been a global event, and foreign markets in most cases have not seen the high returns of the U.S. stock market. I mean, you can see here, if you want to look at what we think values are, right?
Yeah. If you look at the chart to the right, I think it basically says, the one over there says 10.3, the one sticking up on the green-blue.
The sore thumb.
Yeah, the sore thumb. That's the U.S. That's the price of stocks in the U.S., just relative term. it's more expensive than any other economy by a long stretch, meaning our prices in our stock market have been bid up, meaning that they might not go as high, or there might not be the same upside if you look at around the globe. We think the global economy is recovering, which means that places like Europe, Japan, Asia, emerging markets, and the United Kingdom certainly have their issues, but they are underpriced as it relates to U.S. stocks. So if you're thinking about your 401k or your allocation, you should be looking to invest internationally because that's where the opportunities for the bargains might be.
Okay. And you mentioned printing trillions of dollars, and you mentioned the coming inflation. So that's why we decided we should talk a little bit about the U.S. dollar, oil, gold, Bitcoin. I mean, that's a lot of information for one slide. But, I mean, you probably saw it, Bitcoin, right? Elon Musk just went out and bought $1.5 billion for Tesla to hold on their balance sheet, right? Just to have knocking around. So you love Bitcoin. Why don't you talk a little bit about it?
I've been talking about it for literally years as an opportunity. It's not so much Bitcoin.
First, the concept. It's the technology.
It's not the concept. It's a thing. It's a
you love the technology behind it. You love the blockchain.
Well, like it says here, money is a technology anyway. Right? We invented a coin way back when, and
right.
We bartered for things that really were just technology anyway.
It's man-made, right?
So you look at a dollar bill; it's a piece of paper. What's it really worth? Nothing. It's a piece of paper, but it represents something that everyone believes in.
Right.
That's a technology. So all Bitcoin is it's internet money. It's just a new dollar bill. In this case, it's internet money. It's actually built for the internet, so it wasn't around that long ago because the internet hasn't been around.
And the appeal is the finite supply, right?
Yeah, so what happened, Bitcoin is one of many cryptocurrencies out there. Crypto is just another way for saying internet money. But it's really just it's the biggest one, and we've talked about it. You go back and look at our videos on GoPlan 101 on Bitcoin, but it's a fixed supply. And so gold, for example, you can go dig more gold out of the ground and the supply actually would grow.
Sure.
Which changes the price of gold. You could print more dollar bills, which changes the price of that dollar bill, the value of the dollar bill. What they basically put together with Bitcoin is a currency which it's fixed. So it is what it is. If people want more of it, the price is going to go up. Really what Bitcoin is, in my opinion, is it's a decentralized network of money that computers are basically the arbiter of information. In other words, it's not some central bank controlling how valuable a dollar is by printing it or not. It's really an independent computer system where other people are checking each other, and that's called the blockchain. Blockchain technology is here to stay. Blockchain technology is going to replace a lot of the accounting software that we have today because it's a third-party check of a transaction. Before there were just two parties, a buyer and a seller would check.
Right.
Now there's a third-party information source that you can go to that's open, transparent, and available for a history of a transaction forever that you can look at and see whether or not some transaction was real or not because now you have a record of it. And we think that that's going to kind of help people do business better and quicker and with less friction, less fees. It'll probably break down a lot of the global issues of doing money across borders as well. So does it have its detractors? Yes. This is an opportunity for bad actors. Yeah, absolutely. Somebody can come in here. But I don't know about you. John Dillinger was a pretty bad actor. The last time I looked, Bonnie and Clyde.
They operated in cash.
People. Yes. So there are bad actors everywhere. So it's not just how.
Yeah, that has been the knock on it. Basically, it takes the power out of the hands of a centralized bank because it's a decentralized bank. Yeah. Is what it is, right? So
it's decentralized money, period. So by the way, summary on this. Dollar's probably going to get a little weaker as we print more money. Oil will probably come back up with some demand as we grow the economy. Gold will still be there, but we think Bitcoin may actually begin to start replacing gold. Should you have Bitcoin in your portfolio? It is very volatile as an investment if you buy the currency. However, look for blockchain investments. Look for those words. And if you want to do Bitcoin, it's probably not a bad idea to at least understand it by having some investment money in it. I would not bet the farm on it.
No, of course. Right.
It's very volatile.
We would never do that. Which brings us to know your risk profile, right? So it really comes back to the basics. When you're looking to invest and be diversified, you need to strike a blend of the returns you need or you're looking to achieve and your stomach for volatility or your stomach for risk. So here we have the optimum blend of return and risk for many people is that moderate portfolio, which involves stocks, bonds, and alternatives, which we just talked about. So those alternatives, that whole umbrella or basket of things that are considered to be alternatives is growing, right? Because of low interest rates, people are now forced to go out and look for things that are alternative to the traditional stock bond portfolio, stock bond cash, and that's where those other things come in, especially the cryptocurrency. I think that's what we're seeing. At Wall Street, big investment firms are starting to adopt it as a legitimate way to diversify portfolios and give yourself a little bit less risk. So just to sum it all up, we thought we would just highlight once again the keys to successful investing. Obviously, whenever you're talking about investing or your money, you should be planning for the long term. What we're seeing now is cash is not always king. That's an old saying, but with interest rates being as low as they are, it's not probably wise to keep large chunks in there for long-term goals. Obviously, you want to try to harness the power of dividends and, of course, compounding, which is earning interest on your interest. Avoid emotional biases and stick to a plan. The media is overwhelming.
Yeah, this is probably the crux of the conversation in the beginning of today's.
Which is why we did this, right? The economy, the stock market,
right.
Is it good, is it bad?
There's a business model around media and sales and marketing, things like that. You just have to understand that's the way it is. And they're trying to make you make emotional decisions, good, bad, or indifferent. So we just have to be aware of these biases in our own minds as we think about it. What we tried to do today was show you the facts. And that's what you need to look at. And some of the things you have to understand is if you are truly investing for a long period of time, you're probably over messing with it.
Sure. Yep.
Over analyzing it and over listening to the media, because if you're looking for 20 years from now, find your risk profile and stick with it. Volatility, the up and down, the fear gauge, if you will, it's normal. It's the price for getting a higher rate of return. That's what you'll have to deal with to get the higher rate of return. So just deal with it. Don't let it derail you. Diversify. You absolutely have to diversify, and you need to stay in the market. It's not when you get in, it's just being in that matters.
Right, don't time it. So thank you very much. So as we mentioned up top, go check out GoPlan101.com. We're offering free memberships, 30-day memberships. Check it out. There's lots of tools, things to use. There's recordings of these webinars. If you missed some or you have any interest in hearing past webinars, always feel free to contact us, 732-945-7472. Email me directly. That's my email address right there. Remember to join us for our next webinar, which is Tuesday, March 9th, which will talk about taxes in 2021 and beyond, how things might be changing. So that's all for today. Thanks, Jim Hiles.
You're welcome. Good to see everybody here, everybody. Hope you be well. Talk to you soon.